Hi everyone, my name is Adrian and welcome to the fifth and final video in my beginner's guide on passive income investing. So we have a strategy, we know what a dividend is and how it works, we know the different types of dividend stocks and how they work. We also opened up our own brokerage account. Last and final step, finding the dividend stocks and making the decision on which ones to buy. Now I can show you how I find the stocks, but the decision on which ones to buy really depends on the level of risk you're willing to take. Let's start with actually hunting them down. I personally use three main methods. So the first method I use is Google. What a shocker. This was the first method I used when I started because I really had no clue how to find them. Although I wouldn't say this is the most efficient way, it definitely helped me to get the ball rolling. Now there's a bunch of different sites out there, investing sites like Motley Fool, Wealth Simple, Dividend Earner, and a lot of them will list good dividend paying stocks and articles about them. So if you would just basically Google something like this, top TSX dividend stocks for example, and hit enter, you could see what I'm talking about. So the first one would be Wealth Simple, and these are a bunch of websites that talk about finances. And a lot of the lists are going to be like countdown lists, so you'll have a breakdown of a bunch of different dividend stocks and why they think this one would be good for your portfolio. So this is one method that I use, or primarily when I first started, just to get an idea of what the different types of dividend stocks there are out there. The second method I use is basically I look at ETFs. So like I mentioned in earlier videos, ETFs are public funds, so you could always go and see which companies are in the ETF. So what I look at is specifically dividend ETFs. So this one, for example, if we would just look up an ETF that primarily holds Canadian Dividend Aristocrats, it's called CDZ, the fund manager is BlackRock. If we scroll down and we're able to actually look at all the different companies that are considered dividend aristocrats. So this is also a good way of quickly finding a bunch of different dividend paying stocks and specific to your criteria. So in this case, it would be dividend aristocrats. And we are definitely interested in dividend aristocrats because these are the companies that not only have maintained a dividend for a long time, but consistently raise them throughout the year. So this is a second method that I use personally. The third method I use, and this is primarily the one I use right now, is basically called it's a screener tool inside your web broker account. So if you log into your web broker account, all of them should have this tool. If you go to research, you'll see something called screener or screeners. And if we just click on that, I already have one saved, so I'll just click on this one. But it basically will find the dividend stocks for you depending on the criteria you choose. So in this case, I chose three criteria. Dividend yield, of course, which is the most important one. The exchange, so I put any Canadian exchange. You could change it to US or whichever exchange you're looking at. And market capitalization, which is how much the company is worth. For now, I'll leave that blank. So let's say you want all the dividend stocks on the Canadian exchange that give between 6 and 10%, let's say. So you would just put that criteria in here, and bang, your application will automatically populate a list of all the stocks that fit that criteria, so between 6 and 10%. And as you can see here, we have 106 stocks. So that's what I was saying earlier. There's not many stocks out there that give a good dividend. Most of them do not give a dividend. That's why these stocks are considered much safer. And if you want to switch it to, let's say, the US exchange, you'll see that the number will explode because there's a lot more dividend stocks on the US exchange. But since I'm dealing with the Canadian one, I leave this on the Canadian exchange. And I just go through the list. You have the stock symbols. If you click on view more, you have the stock symbol, which exchange is it on? So obviously the TSX, the Toronto Stock Exchange, name of the company, the dividend yield, and the market cap, which is how much the company is worth. And you could even sort it out by dividend yield or market cap, etc. And that's basically it. So you would have this is by far the easiest way of finding them. You'll just get a list of all the stocks, and then you'll have to check them out one by one, do your research and see if you want to buy it or not. So this is the main, those are the three ways that I use to look for dividend stocks, the third one being the main one I use today. Now, as far as deciding which ones you want to buy, it's really up to you. The two main things you need to decide is one, for what purpose you're investing in the first place, and two, the level of risk you're willing to take. If you are more conservative, you don't want to take any risk whatsoever or have a fear of losing your hard-earned money, typically the older generations feel this way, you will probably be buying into companies that are only Dividend Aristocrats, which is a very hard label to get as it proves their stability and reliability. Or you might not want to invest in individual companies at all and just buy ETFs or income funds, which dramatically lowers your risk because you're not putting all your eggs in one basket, so to speak. So that's if you're conservative or only investing for retirement. But if you're like me and are willing to take some risk because you understand that the day-to-day fluctuations in the stock market are mostly irrelevant, that's fine as well. Now, don't get the wrong idea. I still want consistency and a relative amount of safety. I'm sure you do too. So I have a mix of individual companies and funds to balance out the risk. I personally consider my portfolio medium risk and currently make an average dividend yield or interest rate of about 8.5% a year. That's purely passive income in the form of dividends. So my advice is to start with a mix and go from there, because you'll learn which ones you feel more comfortable with as you progress. This process takes time and you learn as you go. The important thing is to start as soon as you can. Let's take a third scenario. Let's say you're only investing for the future and don't even need the passive income right now, either because you're retired and comfortable living with your pension alone, or you want to leave your portfolio with your kids, or you're working and making enough money to live comfortably. So you don't need the additional income of the dividends right now. In this case, you could automatically reinvest your monthly or quarterly dividend cash payments to buy more shares. A lot of funds and companies offer what's called a Dividend Reinvestment Plan, or a DRIP, to do just that. So if you enroll in the plan, your dividend payments won't be given to you in the forms of cash, but instead you will get an equal amount of additional shares. Don't forget, more shares, the bigger the dividend payout is. So think of this strategy as like a compound interest. It's very easy to activate this DRIP plan if you choose. All you need to do is call your broker and ask them to do it for you for all or whichever the companies you want. Of course, the company or fund needs to offer this plan in the first place. Not all of them do. And of course, if you ever want to turn it off later on in the future, you could always turn it off by calling your broker again. I personally only have the DRIP activated for the stocks in my retirement account, my RRSP account. All my other accounts, I get the payments in cash. Why? Because I can't take out or transfer the cash money I get anyway, as this would incur all kinds of penalties and fees. It's just the way this RRSP or retirement account works. So I reinvest the dividends to buy more shares. I'll go over the RSP account in detail in another video, by the way. If you're in Canada, you absolutely need to know how that works. So by now you're probably curious to see my portfolio, as I currently make over $1,000 a week in passive income. Well, it's kind of personal. I don't really, of course I'll show you. Not only that, I'll go over every single stock that I own, which ones I regret buying, which ones are my favorite. I'll do that in a separate video. The whole point of creating this channel is to help you and give you all kinds of investing ideas and strategies, so don't worry. Make sure you subscribe so you don't miss out my new videos in the future. Now getting back to the topic at hand. Once you determine what kind of investor you are and why you're investing in the first place, it's time to buy your stocks. So what should you look for when you're shopping? Well, for me personally, there are three main things I look at when I decide whether or not to buy a dividend stock or fund. Number one, and this is the main or key factor, the dividend yield percentage. Don't forget, this is like an annual interest rate of what you're making with the money that you invest. So for me personally, it needs to be at least 5%, and that's really the bare bone minimum. Usually I stick with 6% or higher. The only reason I would buy a stock that gives under 6% is if the company is a dividend aristocrat, so it's raising its dividend constantly. This way I benefit now, but even more so in the years to come. The reasoning behind this for me is simple. There are many good companies and funds out there that give over 6% and that covers all sectors of the market. So why would I accept less than that? Don't forget, this is my personal criteria. Yours can be different, as a lot of companies and funds that give less than 6 or 5% can also be a good investments for the future as well. My second criterion, this is very important, the dividend history. So I always check back as far as I could go. You could do this easily, either in your broker account by clicking on the price chart of the stock and integrating the dividend yield into the chart, or you can go on the company's fund or website. They will always have the entire history of the dividend. Usually it's called the investors section of the site. The reason is obvious. This gives you an idea of the safety of the dividend, which is critical for us. The longer the company or fund has been paying out dividends, the higher the chance I would invest because it's safer. Some companies' sole purpose are to provide dividends to its shareholder. Those are my personal favorite companies because that's the main reason why the company exists. So let me just show you real quick how I look at the entire history in the web broker tool by using the charts. Alright, so going back to Bell Canada as an example, so here you have the overview, we're in the overview tab here of the stock. If we just click on charts and we select max, which is basically it'll go back to the maximum that it can to look at the company's history. And here you could see here little D's here. These are all the dividend payments throughout the years. How do I do that? Well, it's pretty easy. If you just go to events, you just click on dividends, and that's where these little D's are going to appear. So you're able to see all the dividends. And at the bottom, I have the dividend yield, and this is a lower indicator. So if you go to lower indicator and just check dividend yield, that's where you'll have this graph as well. So with this, as you can see, it moves with the top graph, and as you're moving, you can actually spot the dividend yield, which is right there, as you go. So this gives you an idea of not only how long the company's been paying out the dividends, what the dividend payment is for each quarter, and what the dividend yield is throughout the history of the company. So this is a great tool that I use. I always look at the company's entire dividend history, which helps me make a decision if I want to buy it or not. The third criteria is value. So at heart, I'm a value investor, which means that I hunt for stocks or funds that, in my opinion, are underpriced, either due to world events bringing down the stock market in general, or a big commodity price reduction like the current low price of oil. Remember, the lower the share price of the stock, the higher the dividend yield is, or the annual interest rate is when you invest. For example, let's say the dividend rate is $1 per share. The stock, let's say, is $20 per share right now. So if you invest $5,000, you will get 250 shares at the $20 price, right? 5,000 divided by 20. So that amounts to a dividend yield of 5% a year. So your annual income would be $250 a year in passive income alone. So let's say we buy the same stock, which has the same dividend rate at $15 a share. Well, in that case, you won't get 250 shares. If you invest 5,000, you'll get 333 shares. So that equals to a dividend yield of 6.67%, which amounts to $333 a year in passive income. So you can see there's a big difference on the interest rate that you're getting if you're buying when the share price is lower. It's really like grocery shopping. Once something is on sale, you tend to buy it at that price because it's a lower price for the same product. But don't forget, sales are only temporary. Then there's the most exciting times of all, major events like the 2008 recession or the present coronavirus pandemic, which batters all stock prices, even if some companies are barely even affected by the news. So this is no ordinary sale. It's like a Boxing Day or a Black Friday sale. Everything is on sale. These opportunities come up very rarely, so it's a perfect time to invest more money. So those are the three main criteria I personally use when I'm trying to decide whether to buy a stock or not. Alright guys, so we're basically at the end of the beginner's guide. Let's do a quick summary. So 1, we understand what passive income is, or the strategy behind it, buy and hold. We understand what a dividend is. It's a payment to us from a company's profits since we own a small piece of that business, or a payment to us from a fund because we own units of the fund. 3, we know the different types of dividend stocks. There's regular individual company stocks, there's real estate investment trusts or REITS, there's exchange traded funds, ETFs, and there's income funds. 4, we open our own brokerage account and have a general idea how it works. Hopefully you have your bank account with the same institution to take advantage of the added convenience and efficiency of transferring money around. 5, we decided the reason why we're investing, the level of risk we're willing to take, and how to find and start buying stocks. So I really appreciate you guys watching. I hope you learned something and make the decision to finally start investing. Keep in mind, these are only the basics, and there's a lot of topics on investing I want to cover in my other videos, including taking you on an in-depth tour of my portfolio. I want to talk about things like diversification, the importance of the TFSA and RRSP accounts, and a bunch of other investing ideas and strategies. Not only that, I will also be discussing personal finance topics like budgeting and getting how to get your personal finances in order. I'll share the complete timeline and steps I took to become financially independent at 34 years old. I'll show you my budget and how I manage my money, and much more. So please hit the like and subscribe button if you haven't already done so. I really appreciate it, and don't be shy. If you have any questions, please let me know in the comment section below. So I'll leave you with one of my favorite quotes of all time, once again from my hero, Warren Buffett. If you don't make money while you sleep, you will work until you got it.